Hey everyone, welcome back. Today we're looking at Polestar. Polestar CEO says that annual reports and Q1 earnings will be published in 4 weeks. Geely's electric vehicle brand Polestar has been facing intense pressure amid missed deadlines with Security and Exchange Commission as its stock reached an all-time low earlier this week. This is quite important for Polestar because we've been waiting for this for quite some time. On Friday, the company announced that it expected to file its annual reports for 2023 on Form 20F and publish its preliminary unaudited finance and operational results for the quarter of 2024 by the end of June. So we should be getting these reports quite soon. So this is actually quite a positive. In a recent SEC filing, the company said it's unable to file its 2023 annual reports, which was originally scheduled to be published on February 29th before being delayed to the last day of April. In a video, the Chief Executive Officer, Thomas Ingeloff, said, as previously reported, we identified certain errors in our audited 2021 and 2022 accounts. These predominantly predate our NASDAQ listing and are expected to have an impact of less than 5% in each respective year positively in one and negatively in another, he added. The CEO guaranteed that the company is dedicating the necessary time and effort to correct the errors from the previous reports. And here's a statement, and I quote, we are dedicating the necessary time and efforts to correct them in collaboration with our auditors. We're making good progress and expect to publish the annual results for 2023 and Q1 results for 2024 by the end of June, end quote. In April, the company reported the first quarter of deliveries, approximately 7,200 units. That is a 40% decrease for Polestar compared to last year, the same time period. Previously last year, Polestar actually delivered 12,000 units, making a yearly growth of 26%. These deliveries include 1,200 units of the brand's latest model Polestar 4, which will start production also in South Korea during the second half of 2025. Next year will be a big, crucial year for the Polestar company. Let's take a closer look at the statements that were made by the CEO directly on Twitter.
I've just returned from the global media test drives of Polestar 3 and Polestar 4, where our cars receive highly positive feedback on both the design and the performance. I would like to take this opportunity here to address and provide clarity on some topics that have made recent headlines. Firstly, regarding the filing of our 2023 annual results. As previously reported, we identified certain errors in our audited 2021 and 2022 accounts. These predominantly predate our NASDAQ listing and are expected to have an impact of less than 5% in each respective year, positively in one, negatively in the other. We are dedicating the necessary time and efforts to correct them, in collaboration with our auditors. We're making good progress and expect to publish the annual results for 2023 and the Q1 results for 2024 by the end of June. Throughout this period, we maintained open communication with our lending banks and have secured their understanding and continued support. Secondly, the topic of expanded tariffs on imports to the US. The decision to globalize our production footprint with contract manufacturing around the world is a decision we took already 3 years ago. The Polestar 3 starts production in South Carolina during this summer, with cars for both North America and Europe to be manufactured there. Polestar 4 is already in production, and additional manufacturing is set to begin in South Korea in the second half of 2025, initially for the North American market. Our ability to adapt and utilize our global footprint is a significant differentiator. So, in summary, we are allocating the necessary resources, completing the formalities, and ensuring the successful launch of our 2 great SUVs. This makes us confident in the future of Polestar. And I believe that the value of our business will become increasingly evident and recognized in the coming months. Thank you.
You heard it there yourself, you know. As you can see, some people are probably already a little bit too excited for the Polestar 7, of which we have no idea how that vehicle is going to look. It's been rumored that that will be a straight replacement to the Polestar 2. Take a closer look at what the Polestar 3 looks like during manufacturing. You can clearly see Polestar 3 shape at the rear. That's an obvious Polestar 3. So if we continue, what do we now think of Polestar, given that they're going to come out with their reports? We're probably 4 weeks away, of course. So that's quite an interesting development. Key things that the CEO stated: the Polestar 3 will be manufactured in the US plant at Volvo, in the US Volvo plant. So this is a really interesting step because we've known about this for years now. This has always been public information, but just seeing it being reiterated is always one step closer to reality. And additionally, they made it clear they do want to manufacture cars in South Korea in 2025. They will. They will manufacture cars in 2025 in South Korea. And it's very interesting to see that they have chosen South Korea, which probably tells me that there is quite a lot of demand over there. If they're choosing to manufacture there, there must be some sort of incentive, perhaps not just demand. For them, it perhaps made a lot of sense to manufacture in South Korea, perhaps because of the demand of the vehicles over there, but also the cost to manufacturing and exporting, perhaps. You know, that's going to be quite interesting to see how that works. The company also disclosed on Friday it received a deficiency notice from Nasdaq for failing to file its annual report for the fiscal year of 2023. Now, I always ask, because now the Polestar share is actually worth less than $1, does this run the risk of being delisted? I know if they didn't make these reports, this also runs the risk of being delisted. But also, with the stock being on the Nasdaq Stock Exchange, does that run any risk of delisting if the stock is indeed staying below $1? If that is the case, then we could be seeing a reverse stock split, which would work in my favor because I would love a reverse stock split from Polestar. However, it probably won't work very well for the economics of the company and the way how the ownership is structured. It perhaps wouldn't work too well because of the new investments that they're coming on board. Speaking of which, as we know, Polestar's actually managed to, garnered 950 million 3-year loan facility loans. This is quite a step. They're actually looking for an additional 350 million. This is to help them to get closer to 2025, being cash flow break even. That's a real target for Polestar. Cash flow break even. And with the Polestar 3 and 4 coming to the market this year, next year will be a huge year for the Polestar company. It's very important that they hit the ground running with the Polestar 4 and 3. We also have a report from the Investors Place. Why is Polestar stock up 7%? I'll tell you why, because it's so cheap. It's easy for it to go up by 7%. If Apple, Tesla, Nvidia, one of those big companies, Google, Amazon, if they went up 7% in one day, it would be worldwide news. Because for those companies to do that, it's seen as way more impressive because it's so much more expensive to invest in those companies because they're already so big. For Polestar being such a small company, in terms of market cap, it's not that impressive if the needle moved by 7%, 10, 20%. It's actually not very impressive. So don't get your hopes up. The stock price is still below $1, 78 cents. Don't get me wrong, I'm not complaining. I love cheap shares, especially cheap shares of a company like Polestar, which I do like. I love this company. I adore this company. And that might actually be an understatement in itself, if I'm being completely honest, but I remember a time when Polestar was on the up. The positivity was looming in this company. But I think the sacrifice they're making this year with the low delivery numbers in order to capitalize on the success of the Polestar 3 and 4 so that they can do incredibly well next year, I think it's hit them harder than we could ever expected. I knew the stocks I knew the stocks could be cheap, but I never expected them to be this cheap. I mean, this is too cheap. It's absolutely too cheap, and it's rare that I'll say that a stock is too cheap, but this stock is actually too cheap, which makes the company incredibly undervalued, which makes it easier to buy. So that is it for today's video. But I hope you enjoyed the video. Thank you for watching, subscribe, and I'll see you in the next one, okay? Peace.